Okay, good afternoon everybody. I've got I'm a tax director, as Manoj said, so I've got the inevitable task of talking tax after everyone's had lunch. And what I'm going to focus on today is succession planning and inheritance tax issues. So you want to think about the type of trust you have, who you want to be the beneficiaries. Do you want to give somebody a life interest to the income, or make it purely discretionary so the trustees have discretion? Should it be onshore? Should it be offshore? Onshore, simpler to do, but onshore means it's UK tax resident trust subject to income tax, capital gains tax. Offshore can work nicely, have offshore trustees, not subject to income tax and capital gains tax, subject to certain types of assets being held. But you have all sorts of anti-avoidance provisions to look at, like one of the sessions this morning touched on. Anti-avoidance, which looks through trusts, not effective for income tax purposes. Who can benefit from the trust as well, so your beneficiaries, who you want to add, who you want to exclude. Conjunction with the assets, the family business, putting that in.
A lot's changed. I've been in Switzerland for 8 years. I moved with Credit Suisse, as I say, a number of years ago. I'm a trustee, so basically I do wealth structuring, corporate structuring. Back in 2007, Switzerland ratified the Hague Convention. That was a pivotal moment for trustees entering the market. Basically meant the courts in Switzerland would support us. Obviously, we can take matters to the Swiss courts now, and basically, more importantly, means that we can be trustees within Switzerland itself. So everybody was sitting pretty, 2007, no problems at all. Then obviously things have somewhat changed in the last few years, as my colleagues alluded to. Yes, Switzerland has been going through a bit of a difficult period. I would disagree with one thing, that private banking is dead. I don't think private banking is dead, but I think it is mortally wounded. What the difference is, here we go. So as such, if you were an Italian, German, French private banker who basically had undeclared assets in Switzerland, there's a very easy comment: you're out of a job, end of story. So this is really why the private banks have been regrouping, re-gearing, and really looking at emerging markets. So again, if you're a banker with Indian skills, if you're a banker with African skills, South American skills, you are in business and you will find a job.
Social investment has the explicit intention to create both social or environmental value and a financial return to the investor. So this is a very big opportunity to prove that finance can be a force for good in society, and that investors can actually do well by doing good. And specifically for the private equity funds involved, that they can help worthwhile companies to scale up faster to get their products and services to market, and to be financially sustainable themselves. You can invest through a private equity fund of funds, through a private equity fund, through a mezzanine debt fund, through social impact bonds, which are being used in the UK actually to fund non-profits, charities. I know of family offices who invest directly, but they acknowledge that this is very intensive in terms of time and resources to get it right. And sophisticated family offices can also have products or portfolios tailored to their objectives and values.
Impact Investment Partners is an advisory and asset management firm. We're based in UK. We work across emerging markets globally, and we work across the spectrum of capital, from philanthropy to liquid. Our interests are in building businesses that have positive social impact across critical goods and services, so healthcare, energy, water, technology, financial services, etc. So one of the areas we looked at a lot is healthcare, and within the healthcare space, we looked at the whole area of maternity healthcare. We ended up doing India's first joint venture with the Government of India company to set up a for-profit maternity healthcare hospital chain called Lifespring Hospitals. But what we managed to do was actually build a model where we could set up a 20-bed maternity hospital in £110,000. Through that low-cost operating structure, we were then able to provide maternity care services, so a normal delivery, and this is all for profit, normal deliveries for 40 pounds and cesareans for 75 pounds. Within 5 years, it became the largest maternity hospital chain in Asia. And now they're doing 15,000 deliveries a year. And that chain is now being built out from Hyderabad, where it's got 12 hospitals, to Bangalore, and they're looking at taking that global. Now, there are lessons in affordable healthcare, clearly, in terms of processes and technologies that can be used in that model, that are cross-border lessons.